Hey traders, happy Monday. This is Ron Hayda, Market Tamer. Hope you guys are having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. The broad markets gapped up today. We sort of saw that coming last night when the president announced that him and Xi from China were going to take a 90-day siesta for the holidays and try to work some things out. Markets gapped up. They then started trading lower. In some cases, indexes broke even, and then they rebounded into the end of the day. The Dow specifically, we have a black candle. What does that mean? It's not an ominous thing. It just means this was the day before, which was Friday. We gapped in the upper left-hand corner of that candle. Let's zoom in. So we gapped and opened top left, finished bottom right. Okay, top left open, bottom right finish. So we closed lower than where we opened, but still above yesterday's close or the previous day's close. A lot of volume today, but there was some back and forth. This is still bullish. We want to get above this high here on the Dow, the Diamond ETF from 11.8. That closing high was 261.48, about another 300 points. We clear that, all-time highs are the target. I did get some questions on what is going on in terms of technical analysis right now, and if we use the Dow as the proxy. This is a W pattern. This is bullish. This here is a bottom. This here is a bottom. Plus we have a gap. But because it was over a holiday, I would not worry about the gap down and the gap up. That's a powerful reversal signal. If there was bigger volume, I'd be way more giddy about this rally right now. But I would lessen that its impact, its validity right now because of the holiday was tied to it. But bottom line is double bottom, W formation, which is bullish. We take out that high from 11.8. The bulls are looking good. Target 267.50. There was a question about head and shoulders or something. No. Bottom line is no head and shoulders with this right now. If this would be the head, the left shoulder was here, the right shoulder just got blown out today, pretty much. But you prefer head and shoulders up near highs, not within or below a previous peak. It doesn't quite work as well that way. Here's the spider, something I have a bullish position in. We gapped up, finished in the upper third of the candle of the range today. Got to take out the high from 11.7. The closing high there was 281. We're about 20 S&P points or $2 on the SPY away. Target old all-time highs just back at the beginning of October. The Qs, they finished up well today, 1.75%, almost at the highs of the day. They did get back above the 200-day SMA on the Qs. Target 175 and then back up to the previous highs. The 50-day right now is 172.44. We finished at 172.33. So we're right there, almost above the 50-day. It's looking bullish as well. The IWM had a harder day. They at one point were red. They ended up finishing up almost 1% higher. Nice rally at the end of the day, but they still have to get above the 50-day in orange, the 200-day in purple, and clear out these two previous peaks. So the IWM, just like yesterday, has the most work to do. But boy, they were actually red just for a brief period today. Let's take a look at some ETFs, SMH and IYT. Here are the semis. They did what they needed to do and close above the 50-day SMA. They also closed above the previous peak, target 200-day, and then back up towards the all-time highs. And the transports, IWT, Indigo, Yellow, Tango, they came way off their highs. They only finished up just under under a quarter of a percent at 0.23. But the target back up there at the all-time highs. We've spent essentially 3 out of 4 days cleanly above the 200-day SMA in purple. Now, some other stocks that we talked about here recently as Sunday. How about WYNN? It gapped up, big volume, target 200-day up at 150. That's nearly a $30 move at this stage. How about YELP from last night? YELP went Yelp. Into the gap is where we finished today up almost 5%. Target, you might as well say about $40, so about 15 or so percent higher. PS, which is Pluralsight, big volume today, all things considered, 2.3 million shares. Gapped up, closed near the highs of the day. I would consider this pretty much a breakout. Target around 32.50 and then up towards 37.50. Here's a stock we looked at many times over the past year, which was Tesaro. And I said to you guys previously about the volume returning, wanting to get above the 200-day. That happened today. GlaxoSmithKline made a bid for them. It's almost like somebody knew something, right? There's the big volume, and then magically we get a 58% premium on the stock. When I see these things happen, the trade's over. If I was long Tesaro, which I'm not, but if I was, I would just walk away now, because the only thing that can really happen is small probability, another white knight coming in, or B, the deal gets squashed and the stock drops all the way back down. But that is a gift. Oh my goodness, was that awesome. Here's AMD, Advanced Micro. We talked about the seasonality. It peaks, it reverses in September. If you had known this, you could have known the rally was coming. You would have known that September is, if you're in it, it is a fantastic time to consider selling because we went from 32.50 down to 17.50. Nearly half of the capital was gone. Today, gap up, nice volume. The 50-day was at 23.62. We finished 9 cents above it. Target, this little swing high around 28 and then back up to 32.50. Micron, getting close, long downtrending channel, lost nearly half its value since the summer. If we get above the 50-day on a closing basis on decent volume, I would consider that the beginnings of a potential breakout. More stocks to watch is CLR, which is Continental Resources. Nice pop today above the 20-day EMA for the first time since October, but this stock went from 60 down in the low 40s. Upside targets, I would just go to moving averages. 50-day, 200-day, than the previous peak in October. And how about Cognizant? CTSH had a nice little correction since July above its 50-day target up there at the 200-day, which coincides with some horizontal pausing, consolidation before it started to roll out of bed. Then, $76, $77 would be the target there, almost 10% as well. That's it, folks. Wish you guys a fantastic rest of the day, and I'll see you in the next video.